Hello everyone, welcome to Cheongfuli Weekly Report. Here we bring you the latest China's steel market prices and analysis every week. This week, steel prices stabilized and increased. The spot price of domestic hot-rolled coils rose by 30 yuan per ton this week, and the price of rebar increased by 40 yuan per ton this week. At the macro level, the sentiment of the China-US tariff war has somewhat eased. Although there will still be fluctuations in the future, the most confrontational period in the short term has passed. Moreover, some commodities have been exempted from tariffs, and market expectations have improved. At the same time, the Federal Reserve has started to soften its stance on interest rate cuts, and believes that if there are sudden economic situations, interest rate cuts may be initiated as early as June. Domestically, the central government's consumption stimulus policies have been further strengthened. The Politburo meeting has stabilized the market and boosted confidence, and the overall macro sentiment has turned positive this week. On the industrial side, the profits of steel mills have been somewhat restored. The weekly output of the 5 major steel products increased by 31,300 tons, and the increase in output was mainly concentrated in long-process steel mills. On the demand side, currently it is the peak season for steel demand. In the recent period, high demand has been observed. This week, the demand for both rebar and hot-rolled coils has declined. With the arrival of the seasonal off-season, the subsequent demand for steel will decline. In terms of inventory, the destocking of the 5 major steel products is relatively good. In reality, the demand still has resilience. However, the market is quite concerned about the speed and extent of the decline in demand after May. Therefore, it is currently in a stage where the reality is strong, but the expectations are poor. At present, there are still a large number of export orders. In particular, the recent data on domestic billet export orders is quite significant, which is also the reason why the molten iron production has remained above 2.4 million tons per week. However, as the peak season demand approaches its end, the room for the increase in steel prices will be further suppressed. And before the China-US game is finally resolved, there will be many fluctuations at the macro level. Therefore, after May, the judgment on steel prices is still cautiously bearish. At least, we need to observe the changes in steel demand during the off-season before further considering whether there is room for the subsequent increase in steel prices. After the steel prices were restored this week, it is still recommended to replenish inventory mainly according to demand. In terms of institutions, the recent fluctuations in the production restriction policies have provided a bottom support for steel prices. Given that there is not a significant contradiction between supply and demand at present, and the demand still shows some resilience, it is believed that the room for price decline is limited. Due to the volatile situation of the overseas tariff war and the stable stance of China's domestic macro policies, institutional investors are more inclined to verify the authenticity of the weakening demand and the production restrictions before making further plans. In conclusion, the macro sentiment has fluctuated significantly recently. It is still recommended that only those with rigid demand replenish their inventories according to their actual needs. In terms of varieties, rebar and billets are recommended. Okay, feel free to leave your thoughts, questions, or any related inquiries in the comment box below. And if you found this video valuable, don't forget to follow us for more updates. See you next week.